Hi guys, how's everyone doing? In today's video, I'm going to share with you guys why you should learn how to short the market. Now, if you have been observing the market for the last week or so, you will probably know that it has been hit pretty hard by the coronavirus news, and not only the related sectors like the tourism, the food and beverage, hospitality are hit pretty bad. We are also seeing the tech stocks like the Alibaba, Facebook, Amazon, Google. All these big guys are also been hit as well, and it looks like there are analysts saying that we are in for a bear market and so on and so forth. So quite a fair bit of negative news ongoing in the market. Is that true? I don't know, and it's not really crucial, right? So I'm going to share with you how you can equally make money, make good money, profits from shorting the market. All right, let's go. Now, first thing first, I like to highlight is there are basically just three ways to make money from the market. One is a up move, as you can see, right? In this chart here, it shows you rally, or rally meaning an up move, a bullish move, bull trend, whatever they call it. And then it goes into a sideways market, or normally we also call it it move into a range in that sense. Then it went up again, another rally before it go into another range, and then a sell off, right? So a sell off can also be termed as a correction, a pullback. But in more severe cases, technically speaking, if it drops more than 20% from its current price, then we are considered in a bear market situation. Are we in a bear market situation? If we take the 20% as a guideline, that I would say we are not in a bear market as yet. Although there are a lot of analysts, the gurus like Jim Rogers, Mark Faber, and so on and so forth, right? They've been spouting the bear markets are coming for years, and we are still waiting for it. So that is so much for the entertainment, right? Let's going to take a look at the charts. So how does short sell work? It's quite straightforward, right? Basically, you are borrowing the number of shares, say 100 shares from the broker, the broker that you work with, right? And then you borrow 100 shares in this example, and you sell them, right? You sell them at a high price where the red dot is on the left side. Whether the market falls 200 points, 300 points is something that we do not know, right, at the point in time, right? So, but you're expecting a fall. That is the key word. You're expecting the market to fall, and then you buy back the same number of shares, 100 shares at the new price. Of course, it has to be a lower price, and that difference is basically your profit. So we have often hear the adage of buy low, sell high, right? Buying low and selling it high to make a profit, right? In short sell, you are doing the reverse. You are selling high and buying low, right? Selling high and buying low. So that's how it works, quite straightforward. Okay, so I'm going to share with you a few of my past cases, right? You can see this is the Hong Kong Hang Seng Index denominated in Sing dollar currency, right? Depending on the broker that you work with, there are I don't know, they probably come in different currencies. So I'm using IG at the moment. So IG has Sing dollars, it has Hong Kong dollars, it has I think it has, if I'm not wrong, it has Sing $10 and it has Hong Kong $10 per contract, and so forth. So I always stick to the Sing dollars currency for easy computation, right? So you can see that the price has fell through the trend line, right? Fell through the trend line, it reversed, it pulled back up to about 28267. You can see that on the left hand side. and then it starts to come down again, and then it went up again, pulled back again to about 28,000 before it flushed down all the way with a gap down. So all in, for 2 contracts, I made about $1,200 Sing. So I would say that's not too bad, right? Not too bad. Next, we have the Japan 225 or the Nikkei. Same thing, 2 contracts, made about 466 Sing. Okay, 466 Sing. Pretty straightforward. Okay. What else can you short? Okay, you can also short the Forex pair. Here, I take a shot at the Aussie yen. Okay, Aussie yen. I make about near to about 8,000 8,000 yen, right? 8,000 yen. I wouldn't be able to tell how much is that in Sing. I need to do a conversion, but that is still good profit for me. Nevertheless, I can see the long straight red bar, right? The bearish candle coming down very fast and furious in this chart, right? So thank God I make about 8,000 profit from this. So there are many products that you can buy. Equally, these products also allow you to sell. So you can sell or you can short the Forex, the futures, the commodities, whether it be the soft commodities like corn, wheat, cotton, coffee. You can also be shorting the hard commodities like the metals, right? So you have your gold, your silver, your copper, all these you can short as well. And of course, that we also be talking about the cryptocurrency, the Bitcoin, Ethereum, Ripple, Dash, whatever whatever cryptocurrencies that you're familiar with. You can buy them. You can also equally sell them, right? So in this video, I'm not going to talk about other products such as options, where I know some traders they kind of like that instrument. You know, they will buy a put option at a certain point, you know, to expect the price to fall because it's the earnings season, or they foresee that it has S&P has reached a top, it's very topish, and they expect the price to fall within the next week or so, and then they would be selling. Now, I am not familiar with options, so I reserve my comments about how that product works. So strictly, we are restricting to just directly shorting the market. Okay, so that is directly shorting the market. It looks simple, but I would suggest if you are new to short selling, right, is to start small, engage in lots of practice, right? Lots of practice, start small, and take profits. This is key. Take profits. Do not assume that it has fallen down from the trend line and it will stay that way, right? I will show you at a later time some of the charts, right? Take profits and use trailing stop loss. What do I mean by trailing stop loss? If I were to use go back to the Japan 225, you can see, right? I shot at around 23,400. The moment the red candle, a couple of red candle flashed through that price already, I would adjust my stop loss, right, to around 23, maybe 23, 700, 800. So even if I'm not watching the computer screen, and if there is a sudden surge, it says that there's a sudden surge and the price reverse back, I'm guaranteed of a certain profit in that sense, right? So it's a question of how much it is, but I am making profit. Okay, so I didn't do that for the Hong Kong dollars. Okay, I didn't do that for the Hong Kong dollars, but I did this also for the Aussie yen, as you can see, right? 73.6, it flushes down immediately. I apply my trading stop loss so that if it reverses, right? If it were to reverse, then I'm guaranteed a profit. So it's a question of the amount, right? Okay, and to use a smaller time frame because the volatility is really in the smaller time frame. So you want to take your quick profits unless you are very familiar with how short selling work, then you can go on the longer time frame like the 4-hour or the day time frame to do your shorting. Okay. Next, I will be sharing with you, okay, the how it works, right, in some of the pairs, right? So in tradingview.com, you can go to my profile, which is dchua1969, dchua1969. I do a search for authors. You can easily find me, and you will see a lot of my trade setups inside there. Probably I think close to about coming to 1,000 already by now. Right here on December 6th, I focus on USD CAD. My data is bearish on USD CAD. Right, so this is on 240, which means a 4-hour time frame. 4-hour time frame. See, the price action here has already fell through the bullish trend line, right? Fast and furious, right? It came down here, and then as you see, once it passes through this red long candle, right? The length of the candle gets shorter and shorter and shorter, right? So I foresee there is going to be a pullback before it flush down again to 1.304. Okay, let's take a look how it end up. Okay, right? This red candle here on the 4th December was a long one, right? If you are too eager to catch the price, just like in buying a contract, right? When you're long, you are so eager that the price has already gone up. You say, wow, everybody is in this market, so I need to be in the action as well. So you catch it. So you catch here to short the market. Now, if your stop loss is going to be very tight, if you put your stop loss somewhere here, then 100% you are taken out already, right? If you put your stop loss here, maybe not, depending on this week here, right? If it touches, but if you put your stop loss here, then of course you are not out. But bear in mind, the wider your stop loss, the higher your risk per trade, right? So there's no need to be in a hurry. If you are so-called, you have already missed the first train, the price would pull back as in this case, right? Pull back as in this case, then you can execute your short. For those who are already in around at this level, right? You short, it touches here as one of the, this blue line here is the support line. Take some quick profit, yeah. If not, right, come up to here, you're still safe. Of course, your profit is much lesser, but then it come flushing down, flushing down, flushing down, flushing down, flushing down all the way. Okay, but that's not the end. Take a close look at how the chart perform. Okay, so it flushes down all the way until here to about 1.296. Then it forms some. There is some support forming around this region here. So if you are still delaying, procrastinating, and totally heck care about your position, this is what's going to happen. Okay, the price would reverse as it is now, right? It reversed very strongly back up with this long candle, long green candle. Okay, and it will evaporate your profits, and you might even incur a loss. Okay, you might even incur a loss. So let's take a quick look. See, if you were to short here at 1.328 and you did nothing when the price fell to 1.296, right? You could have taken a very nice profit here, but you failed to do so. Okay, then it reversed and came back up here, right? And you might be in a small loss here, depending on your stop loss again. Okay, before it come down back to here. Right? So maybe you are in I would say, a possible break-even position had you hold this contract till now, right? But that's not what we want, right? We are not in to buy or sell a position just to break even, right? Unless you are new, you have no idea what you're doing, then you are just, okay, trying to feel the pulse of the market, and there's a very high possibility that you may not be watching your position as closely as you should, okay? Right? If not, then you should be enjoying this write down, okay? Enjoy this write down and make a very good profit out from it, okay? Next. Okay, next on the Jan 23rd, I talk about Euro the euro versus the USD on the day chart, right? Here's on the day chart basis. I say euro fall may take a while, meaning you see the price action is here, right? Unless it break down from 1.107 before we are talking about coming to 1.099. Okay, that is what I kind of foresee that the price is going to fall to. And I make a comparison with Euro USD versus the DXY, okay, which is basically the US dollar index, okay. So this dollar index and euro, they will move in opposing direction, which means when DXY is going up, euro will be coming down, right? So it's opposing direction, okay, opposing direction. Okay, let's take a quick look how Euro USD perform from Jan 23rd to now, okay, beautiful. So for those who followed me in that sense would have made a nice handsome profit, right, from 1.107 all the way to 1.10 on 1.08, 1.08, all right, 1.08. Now, as I said, if you had short here, anywhere here, okay, don't have to be so precise, then the moment that the candle flush start to flush down, you can adjust your stop loss, which you put it here, all the way down here. So that if you are, you know, for some reason you are not watching this pair and the price to move back up, then you're at least assured of a certain profit. Right? For every trade that you are in, you want to make sure you are in for a profit, right? And then once you get to the habit of that, seeing every trade making you, you know, single digit, double digit, triple digit, whatever number of digits that you want for the profits, then you can learn to fine tune it and get higher profits. Okay, so the whole idea is to keep your momentum up, keep yourself motivated, right? Because if you have suffered from 2 to 3 times of losses consecutively, that's going to really demoralize you, and I don't think you are in the mood, you know, and it might cloud your judgment and your decision about taking on the next trade. Okay, now the next one I'm going to show you is on Hang Seng, okay, which is one of the product that I would short sell quite frequently, okay, from time to time. So let's move on to firstly the weekly chart first, okay. The weekly chart tells us a very simple pattern. One is first the Hang Seng Index on the weekly chart is moving nicely on a bull trend, right? From 2016 all the way to July 2019, right? So it's a good 3 over years, right? Bull trend in that sense. However, if we were to take a close look here, look what is happening. The price action has been flirting with this bullish trend line, right? So it's coming down, it's going back up, it's coming down, it's coming back up, it's going down, it's coming back up, right? How many times it has break down? 1, 2, 3, 4, 5, 6, 7. So we are now on the 7th attempt, right? 7th attempt that Hang Seng is trying to break down from the weekly time frame trend, bullish trend line. Is it going to fall through or get wobbled? In this trend, that's more important one, right? Okay, what's the more important one? So most of the time, I would go to either the 4-hour or the 1-hour chart, as I've said, to do my short sell. So I'm going to use the 1-hour chart to explain to you, okay? Okay, you can see. Okay, just bear with me, okay? Okay. This is January 2019, all right? So the price has moved in January 2019 all the way up here to 3rd of May. So it's about a good 5 months, 5 months of bullish move until it comes flushing down here. So like fairly straightforward, there's a big gap down here. It pulled back to here. So this is your entry to short, right? Put it over here. entry to short, right? You take profit somewhere here. Why did I say here? Very simple. I said in trend line analysis, at least in my experience, I do not use the risk reward because it does not maximize the profit that I want. So how do I know when to take profit? I will draw the trend line here. Okay. I'll draw the trend line here being red in color because it's a bearish trend line. That means the price has broke out, break out from the bearish trend line, right? Fall, and then it break up from here and before it go up. That means around here will be where I take my profit. Okay, if you go on a risk reward ratio basis, you say, oh, I want a one risk to 2 times of my reward. And 2 times of your reward, if you put your stop loss here, okay, very simple, then easily just from this visual, you can already tell your profit margin will be somewhere, say here, this is 1 time, this is probably 2 times, right? So you miss 3, 4, 5 maybe, right? So by using the trend line, I maximize my profit. I am risking 1, I made 5. Okay, even if in conservatively I'm out where somewhere here, I probably make 3.5 to 4 times as compared to the traditional risk reward ratio, right? So this is just one short sell opportunity that you can do. Okay, let's take a look at the others one. Same thing over here. Let's take this out. Okay, it moved up and then it flushed down again, right? So don't catch the falling knife in a sense. It came down here, right? If you were to short sell here, you see the price move up a little bit here, right? You never know. Well, of course, now we're on the high side. Can this price go back up like this? Yes, the answer is yes, right? Because we do not know if it would move back up. Like earlier, we saw how it flirted with the bullish trend line. We want to be very cautious. So we wait for the pullback to here, then we start selling, okay? And then it flushes down here again. And here is the challenging part because it's moving in the range. So same thing using the trend line, okay? We draw it down here, okay? This is where we exit our position, right? This is roughly where we exit our position. This is, okay, the high here. This is your risk. This is your reward. Again, 1 time, 2 time, 3 time, probably 3.5 times. Okay, again, very good profit margin. Okay, using the trend line analysis. Okay. Okay, do we have another opportunity? Okay, there is right here the same thing, right? Price went up, went back in, right? Remember earlier we were seeing the day chart, right? I said the price action was flirting with this bullish trend line. That this is the one that I'm showing you. Okay, we'll ignore these smaller ones here because this can be quite tricky in that sense. Yeah, can be quite tricky in that sense. Okay, and you can see that the price is generally trying to move back inside the trend line. How can I tell? You see, this is the low, right? But this is the lower of this low. So we have lower low, lower low, lower low. Okay, eventually it moved back up here. Okay, move back into the trend line here. So here will be another one, same thing. Came down, pull back, right? And then we enjoy the right down here. So this is where we are right now, currently. Okay, very nice, right? There's a gap down here, right? It gap down, okay? Wait for it, pull back to here. That is where you short, okay? Your entry can be here, okay? Your stop loss can be anywhere here or here, up to you. And the price is still falling, okay? Draw your trend line down here, okay? Draw a trend line down here, okay? Of course, you run the risk of this moving, going like that, like that, like that, and then it come up here, okay? Right, so of course, this is one way, right? If not, then you can change your trend line from here, okay? to here. Okay, there it goes. So you have a smaller one in that sense. Okay, so the price may go sideways like that before it come up back here, right? Then you take your profit, but you never know, right? It may just do a false breakout before it go tumbling down again. Okay, so there you have it, a short sell opportunity where you can make good profits from the market, whether it's regardless of what condition that the market is now in. So I hope you have learned something useful from this video, right? God bless everybody. Until the next time I see you, take care. Bye-bye. Woo.